What's going on, guys? We got to talk about Chargepoint. It's been absolutely tanking on news of a CEO exit, as well as news about cutting their revenue expectation for upcoming earnings. Now let's check out what's going on here. Let's check out the chart too. Chargepoint has definitely been having a rough time lately. So first off, they provided some preliminary third quarter results, and their earnings is coming up December 6th. Now this is definitely not good news. They gave us a huge cut in expected revenue, as well as a couple other things. Let's take a look at what's going on. And we also have some news. I'll show you the other article about the CEO transition, but here's what they just gave us for our preliminary third quarter expectations. They expect a revenue of 108 to 113 million, which is a huge drop compared to the 150 to 165 million expected. This is not good. I'll show you guys on TradingView where their revenue's been quarter over quarter, year over year, things like that. But this is a huge cut in revenue compared to what they've been getting in previous quarters. They also expect to take a non-cash impairment charge of $42 million, resulting in GAAP gross margin of negative 23% to negative 21% and non-GAAP gross margin of negative 19 to negative 17%. They changed their pre-impairment non-GAAP gross margin. They expect their pre-impairment non-GAAP gross margin of 19 to 21% compared to 22 to 25% as previously expected. We want to see these margins improve, not decrease. They also expect operating expenses of 129 to 131 million and non-GAAP operating expenses of 80 to 82 million compared to 81 to 84 million, which was previously expected. Now they do have a decent cash balance. They have 397 million in cash, and this includes 232 million of at-the-market share offering gross proceeds, meaning they have been diluting quite a bit, and that can explain pretty well why the price has just been continuing to sell off. There are not enough buyers right now to absorb all of these at-the-market share offerings. But if you look at it like this, as a company, this does help them. It gives them the cash they need to continue to survive, to eventually hopefully reach profitability by late 2024 like they expect. They haven't gave any changes there, so hopefully they still do expect profitability by late 2024, but we'll see where that goes. And as of October 31, 2023, Chargepoint's $150 million revolving credit facility remains undrawn, meaning that if they want to pull out this $150 million, they can, and the company has no drawn debt maturities until 2028. So they have quite a lot of time to worry about their debt. They have a good cash balance, and like I said, they have been diluting shareholders, which of course sucks for us, but as a company, it does improve them and pushes them along while they're unprofitable. Now, I also want to talk about these exec changes. So this preliminary results, this just huge drop in revenue expectations, gross margin expectations, and this executive change is combining to be a huge sell-off for Chargepoint. If it was one thing and not the other, I don't think it would have sold off so severely. But because both things are coming together hand in hand at the same time, it definitely draws red flags. You know, they're expecting lower revenue, lower gross margin, and things like that while execs are leaving. Just looking at that as face value, it makes you think something's seriously wrong with this company. Why are these execs leaving? And why are they lowering their expectations? This brings a lot of fear. The combination of these two things combined makes it even more scary than one or the other separately. The current CEO, Pascal Romano, has been with the company since 2011, and it's definitely concerning to see him leave. Now, who's taking his place? Well, a previous Chargepoint executive, and Mr. Wilmer, who was previously the COO, is going to be taking Pascal Romano's place and becoming the CEO as well as president. So this Mr. Wilmer, who was previously the COO and is going to become the CEO, does have quite a lot of experience, 30 years in global technology, operations, and customer support. He had previous leadership roles, including a CEO at Pliant Technology, Layden Energy, Mojo Networks, and Chpt. And we have some more bad news. The CFO, Chief Financial Officer, Rex Jackson, has departed the company effective today. So while we're dealing with this change from COO to CEO and Pascal Romano leaving, we're also dealing with another executive calling it quits as well. So all these things combine to bring a lot of fear. Looking at this as a company, why are leaders leaving? Why are there two executives now that are leaving? And why are revenue expectations coming in so much lower? Well, one explanation for revenue expectations coming in so much lower is demand has been decreasing apparently. And we have this quote here: the Chargepoint board and I are committed to significantly improving operational execution to ensure that the company is building a stronger, more resilient business for the benefit of all shareholders. Our first steps are to take an additional non-cash inventory impairment charge related to product transitions and to better align inventory with current demand. It sounds like they have a little too much inventory and demand just isn't there. The demand they expected isn't currently there. Could this be due to high interest rates? Could this be to Tesla's charging network. It could be a combination of those things. And it could just happen to be a coincidence that the CEO is leaving at this time. He was probably already planning on retiring, and maybe he wanted to leave now before things potentially got worse. Or maybe it's just a coincidence, but Pascal Romano is 56 years old, which would be a great time for someone that's pretty rich to retire. Chargepoint on the chart looks terrible. We've just been continuing to sell off. We gapped down here on this executive leaving news, on this decreased expectation of revenue, and I would be very careful here. We are approaching oversold, but that doesn't mean it can't sell off a little bit more. If I was going to be adding, I would want to wait to see where it kind of levels out at. Do we get a little sideways action from here? Do we experience a little bounce? I would be very cautious here. I think there's going to be a lot of fear leading up to earnings, but of course a lot of this is priced in. We just experienced like a 35% drop here today, and overall long term I am bullish on Chargepoint. I do think they are going to slowly but surely grow their revenue despite some hiccups along the way. Now remember, they're no longer expecting this 139 million in revenue, but let's look at what we've seen past quarters. $130 million quarter, $152 million quarter, $108 million quarter, $81 million quarter, $80 million quarter, $65 million quarter. I mean, you can see that they had such good revenue growth earlier on in this company, and things just suddenly drastically changed. And that is quite a bit disappointing, you know, with these unprofitable stocks. What you really want to see is increased revenue, better gross margins, and we're not seeing that. But I do believe in Chargepoint for the long term. They are the largest EV charging company out there, and I do think in the end they will become successful. They will reach profitability. We'll see if it comes late 2024 or if they give some new expectation, but I am going to keep my small position and let it ride. But I am not going to currently buy. I'm going to wait and see where things level out. But let me know what you guys are doing. Are you taking advantage of this fear? Are you holding back and seeing where this goes? Or are you shorting it here? I would be very careful shorting because of how much it's already come down, but that's not to say it can't fall a little bit more. I do personally think this reaction is a little bit overblown, and I wouldn't be surprised to see Chargepoint have a little recovery from here, but will this little recovery turn out to be a dead cat bounce and further creation of new lows? Or do we start recovering from here, never to see this price again? No one really knows. But in the end, I do think long-term Chargepoint will be a successful company. Of course, there will be hiccups along the way where they decrease revenue expectations, where quarter over quarter you see a dip in revenue. Chargepoint has a decent cash balance. They don't have much debt. And I do expect Chargepoint to slowly but surely continue to grow their revenue, but it is definitely disappointing to see this cut in expectations. Let me know what you guys think about Chargepoint, and why do you think these execs are leaving? Are they trying to jump out of a sinking ship, or are they simply ready to retire and enjoy life? Let me know what you guys think down below. Thanks as always for watching, guys, and enjoy your weekend.